You see this area right in here that I was sharing with about. Okay, so there are times when you trade and you get up to these places and it blow through there, right? So when that happens, I mean, you want a trade that only had a 33% chance of winning. This is manipulation. So when you come to places as you're trading, as you grow to be independent, as you go through the classes or what have you, my rule is don't trade through anything. Don't ever trade through anything. Um, when you get to something, you stop. Like, so you can trade from here to here, but you would take profit if you got there. Because when you get here, this can happen to you. You never take trades from this spot. So if you have a setup like we did here, this is a setup right here. You see how that candle came back and touched that red? And so that was up, down. This is supposed to be another push. It may end up being, it just hadn't happened yet. So when we closed above this area, we came back and retested that area, but went back through it. Now we're coming back up there above it again. But this area right in here is an area that's a trouble area. So when you get to those trouble areas, um, you got to wait for it to, well, you don't have to do anything, but my suggestion is you wait to break, retest, and then bounce, create another high, and then give you a higher low like that, and give you another condition. So does that mean wait? I gotta wait. Yeah, that means you gotta wait because that means if the market goes up here, we gotta wait for it to come back and give us another push condition, right? So if it goes, and this happens sometimes it I call it locking you out. They lock you out because sometimes they will go here and keep going. And he'd be like, I be God dogging. Like they don't stop. Well, I mean, that's how it is. But if you want to take high percentage and trades with low probability, you'll wait until it's clear. There's nothing in the way. You have a tradable condition that you can name. Goose mode, another push, continuation. You can name it. You so you so so like looking at the macro chart, I don't even look at that until it's time to take a trade, until I make sure that nothing is in the way and I'm in the right condition. Does that make any sense? So I don't sit here and look at the chart tick for tick for tick for tick for tick for tick. That's why sometimes you'll call my name and I didn't hear it because I'm watching TV. I'm not looking at it tick for tick like that. I'm only looking at it when it's time, when it's in a condition, number one. Because forecasting is what? Forecasting is knowing, and I know Russ taught you this. What is forecasting? It is knowing which way the market should go based on its structure and conditions. That's step one. So it's 5 steps to this. So if you get step one wrong, you're gonna always be wrong. You see what I mean? So if you don't know which way it's supposed to be going, then you're on. And how do you do that? Based on the structure. When I say structure, what am I talking about? Stuff like this, stuff that you run into, and conditions. What am I talking about? These conditions here. The three conditions that you have been taught, and you have a video. If you need that video, April will put it in the chat for you. You know how to have any questions. So structure and conditions, these are the operative words. And so I don't trade against the structure and I don't trade out of the conditions unless we're in a sideways, type movement. So all of those people who press that button going long, they're stopping them out right now. They're stopping them out right now. Any questions? All right, cool. This is a good teachable moment right here. So, like I just mentioned, I missed that trade because we will be trading from the edges. The edges is the top of, so when they make a range, let me show you that. Yeah. So this is the top of the range. This is the bottom of the range here. And so when they make a range like that, tension to go short, tension to go short. Ain't stand down. So when they make a range like this, um, so the bottom of this range, and that's the top of that range. So the trade we missed would have been would have been a trade coming off of the top of the range to get back into the middle because they did not break out. They did not break out the range. And that's what they were doing right there. So when they was making it look like it was gonna go, gonna go, gonna go, they were just building contracts, people going long, going long, going long, going long, going long, and then they just finally, just came down and just popped them. So that's that's that we call that trading from the edges when you find a range. And that's the reason you want to wait for the market to break out of the range because there's no guarantee to break out of the range because this market right here could do this all day long. It could do that all day long. And then a lot of times as it does it, the range just gets tighter and tighter and tighter. So it's wide, then it gets smaller, then it gets smaller, and before you know it, it's like that, especially on a Friday. So we know sometimes on Fridays it's just a little bit difficult. Not difficult, but sometimes they do this, like they range. And sometimes they do this on Mondays. So that's why sometimes Mondays and Fridays we don't have, a plethora of opportunity because of just how they are moving the market or not moving the market. So hopefully some of these explanations are making sense to you and that you understand what I'm talking about.
Yeah, thank you for sharing everything. It's very helpful.
Hmm. So yeah, so it's like the macro chart is the gun. Like I don't even really, until you identify the target, there's no need to, have the mouse in your hand, be excited, like you know what you're waiting for. You're waiting for a condition, which if this counter close, we'll be in a condition again. But what's the problem? Somebody tell me. If we get in this condition, which will be AP, what will still be the problem?
The PDC.
Talk to me. Yeah, yeah, a bunch of crap. This, the high, that, the PDC, you see, that market has not left this area, you know. So if you enter into that market and it shoots up there, look, right? I noticed on that 5 minute chart, we did not get that close. The body of that candle did not close above that red rope. Do y'all see that?
Yes.
Okay, so that's not a tradable condition. And two, you see this wick?
Yes.
That's a rejection of this area. So they
Okay.
went and stopped out the low and came back, just stopped out the low. So everybody who was in there and had their stop loss, so the people who entered this trade in these areas right here going long, because the market is going, the structure is a structure to go long. But um, the timing still has to be right, you know? So
Yeah.
those people, if they just stop those people out, that's what that is. You see what I mean?
Yes. Thank you. I on your
Hmm.
screen I can see it much better. I'm
Hmm.
traveling again, so I don't have my computer. So I'm
Okay.
now using my phone, and I don't get to
Okay.
see nearly the information that you can on the
You could
desktop.
actually trade on your phone too. So,
I know, but it's not easy. It doesn't look like.
yeah, but
I
if you
mean,
wait for the
I don't know
trades,
which.
you'll have a good chance to doing it, correct?
Yeah.
Because
Yeah.
it
Once I
won't
learn
hit
how,
you so
I'll
quick.
be able to.
Hmm. So this is referred to as a demand signature, right? So when you see that, that lets you know that there's a lot of demand down there. Look, let's look and see how long that wick was. That wick is 667 ticks. Just that wick, right? So there's a lot of people down here who don't think that market should come down here. You see?
Yeah.
So see, top of that range that I was talking about. Boom. That's the top of that range. All right. And so we're in the middle of it. Malcolm in the middle, diddling in the middle. And that means what? Nobody has control. This is halfway. Nobody has control. Sellers, buyers. Um, this is noteworthy here. So I put this circle here because the market, when it got here, it turned around and came here. And I put this circle here because this is where it stopped and came up. And that is what made me, once I had those two circles like that, that's when I said, okay, that's the top, that's the bottom. I was waiting for the market. You see, I got these two circles sitting here waiting. Got this one when we come here to go short. That's the trade we missed because I was uh, communicating. And then this is where I was looking to go long. And then this is where I would be looking to go short. And this is where long. And this is where short. And this is where long. So when they try to take the market sideways, then I switch from my vertical approach, which is the sequence, right? Which is having the market is vertical like that, and then you have the red, you have the white, and you have the blue, and you have space in between. That's called divergence. That market is moving up, right? Well, when it doesn't move up, then which way is it moving? Sideways. Then you have to find the top, you have to find the bottom, and then you have to identify the top, identify the bottom, wait for it to come here. Boom. Now that's a lower percentage trade when it come here to go up. That's so trade from the edge is a lower percentage. Then around about 65, 70%, something like in that, some there, somewhere in there, because they can always, when you enter, come and break out. They can break out on the top or break out on the bottom because it's sideways. So therefore, when you enter these trades, you're like, let me go with a little smaller position. I have a quick tighter stop because it could come in here, manipulate me, and come out of there and kill me. But if it does that, that means they're breaking out. And on the pullback, you can enter because there's going to be some kind of trade setup right there. So you get out here and then get back in going in the correct way. But that's an active trading strategy right there. You got to be active emotionally and manually. And
Yes.
so,
Thank you for that
hmm
perspective. I hadn't seen that yet.
hmm And then, yeah, so once and that's what letting the market create a condition does. It gives you the insight on what's going on. So like when I opened the chart this morning, I knew right away when I saw when I saw this, yeah, okay, it's Friday. I saw that. Then I said, okay, they took off here. But I've seen them go here and go here. I've seen them go here, go here, go here, go here. Like that's the reason I don't chase that opening range because it can hurt, you know, uh, when you miss it. Yeah. See, so now they're just gathering contracts because some people are long, some people are short. And which way would they push the market? Whichever one they have the most. So if $10 million worth of people went this way and 30 million went that way, they're gonna come this way. They're gonna stop out the most money. So right now they're just gathering money on both sides. Because in the middle, both sides believe. The sellers believe in this market going short. The buyers believe in this market going long. So everybody's just, getting their positions, and as they build up the positions on both sides, whichever side has the most money on it, that's the way they're gonna go. Does that make any sense?
Yes.
So just think about all the people that went short here. The people who went short here, where did they put their stop loss? Here. The people who went long here, where did they put their stop loss? Here. So if it's $100 million worth of stop losses here and $200 million worth of stop losses here, which way they're gonna go? They're gonna stop out that guy. So when you enter the trades in the middle, you're just guessing because you don't have no way of knowing. There are no tools that'll tell you how many people are here, how many people are there, um, because people can spoof. What I mean is that savvy big time investors they'll put um, fake orders in here, and they'll put fake orders in here. And so when the market gets down there, they'll take them away. That's called spoofing. And then guess what? Take your money because you thought you were gonna be able to go down in there. So so it's almost like if you follow the rules, that'll just protect you from all the unknown stuff that you do not know.
Yes, makes sense.
All right.
Can I ask you a question, Cornelius, while we're waiting?
In the Woodruff, all right. Sylvia Pickett. Yeah, baby. All right. So let's look at this thing. Let's walk. Can y'all see my screen?
Yes.
Okay. So remember, this was the edge. Remember, we talked that out. We talked it out. So it's nothing I'm just making up. Into this edge. Now, so when we came down in here, I was like, okay, if they're really going to go back this way, we got to deal with the middle. Uh, we got to deal with the middle of that area, which is here to here. All right. Now, so you might be asking, why didn't I start the box up here? Because that's the reason. That's the reason when you find the edge, you have to put the original markers on, because this is the edge. All of that was what? What was all of that, guys?
Over.
Excess buying.
Yeah.
Yeah. And what's the man? That's good, man. Y'all making me cry. Excess buying. Okay, so what's the purpose of excess buying? Why would they buy excessively right here? And who's doing the excessive buying?
I don't know that.
The market makers, the bankers are doing excessive buying. They're buying here. They bought up this candle to get the public to buy into that candle.
Okay.
Excess buying. So they were never going that way. That is what we do not know. And that is why when we get to trouble areas or places in the market, we have to stop and wait to see what they're doing because we see what they did. It's one or three things they could have done, right? One or three things. One is what? Rejection. Another one is what? Manipulation. And another one is break, retest, bounce. So with this candle close up here and they come and give us a red candle that does not violate this and then another green candle, okay, well now I believe you're going that way now. Because when you coming up here, you could be doing what? Excess what? Buying, trying to get people to go into the market. And so when they do that, I don't believe it. I don't believe it until they okay, go ahead, finish me out, close me out, maybe even start me a green candle here, and then bring me a red candle back down here to retest that. And then now give me a green candle that beats that high. I believe you now. I believe you now. Now I'm waiting for the next condition and I'm jumping on the train on the next condition. After all of that, though, so that's 5 minutes. That's 10 minutes. That's 15 minutes. That's 20 minutes. And then it may be 35 to 40 minutes before I get the opportunity up here. But guess what's going to happen when I get the opportunity up here? I know which way they're going. It ain't no ifs, ands, or buts about it because I've been watching all of that. They're not going to
Okay.
come back down in here now. See, once they beat that high and then come back in here and retest that, then bam, that's what we're looking for. All right, so now I put this here because I got into that soliloquy there because I was trying to explain why I put the the uh the marker here. So I put the field marker here, and I'm using it to do what? To find the middle. That's what I'm using it for. I'm not using it to trade off of. I'm using it to find the middle. So that's what I was looking at. And I didn't talk through it because I would have missed the trade again. All right. So I was looking right there. When this candle here closed above that middle, off of here, this is an engulfing candle. The candle starts beneath this candle, starts beneath that candle, because that candle there, there. So we started beneath that candle and closed above that candle. That means that candle engulfed that candle over with. Now let's make sure they don't come back down here because this is the middle. Close above. Let's go. Remember, I said I'm getting tight because we get to the edge, and this is where a lot of people lose profits because when they get to these edges, they don't take the profit. And what they allow to happen, uh, because they taking a 33% chance that it's going to break like that. And so when they get up here, they allow the market to do this, and then they get out here where they got in here, and this is all the profit they get because they won't take the profit up here, hoping that it does that. But but it's only a 33% chance it's gonna do that. Anytime you run into something, one or three things will happen. All right, does anybody have any questions, any concerns, any criticisms, any comments? Anything you care about?
No, just thank you. That was great explanations.
Yep.
Hmm.
Thank you again. And I love it when you do that. It really helps me
Hmm.
immensely. I'm sure everyone else benefits too, but I really love it when you explain what you just did.
And I appreciate you verbally saying that because it does, nobody wants to be talking and nobody cares. You know what I mean? So it's like I just, so, but I'm gonna figure out and pray about a way to curtail. I mean, to do it while I won't miss the trade. You know what I mean? So, because that is a thing I don't have. what maybe only 13% of the people in the world have is the ability to do two things at the same time well. Everybody can't do it. I'm one of them. So, no more questions, anything? Father, we bless you and we thank you for giving us knowledge and giving us this ability. We know that men made this evil system. We shouldn't even have to do this to get money. If $200 million, billion dollars is in this market every day, why do we have to do this? But thank you for giving us the knowledge and the wisdom so that we can do it. A man cannot create a system that you can't break. And thank you for giving us the wisdom and the knowledge, the strength and the fortitude to continue on. Lord, bless every trader in here. In Jesus' name I pray. Amen. All right, brothers and sisters, I pray that you have a wonderful, wonderful, wonderful weekend. Have a great day.
You too. Thank you.
Thank you. You too.
Thank you.
Bye-bye.
You're welcome.